Yo guys, so Salesforce stock just reported earnings, and to be honest, they were really good, but the stock price is not reflecting that. Check this out. So Salesforce reported earnings, they touched up to nearly $275, and here we are now at the lowest point since then at $252. We're up only 3.37% on our share. So Salesforce is actually our second largest individual holding, our individual stock holding, and we were up over 10% right here. So let's go ahead and look at their most recent earnings report. But first, let me show you some of my favorite metrics about the company. I may be a little biased because I own the company, but I'm going to show you all the real numbers like the stock-based comp expense, and we're going to put some numbers into comparison. So right now, Salesforce has a free cash flow yield of 4.6%. Just for some comparison, Microsoft has a 2.41% free cash flow yield, and that's another software company. But anyway, the free cash flow yield is basically how much of their market cap they make in free cash flow every single year. So they make 4.6% of their entire $245 billion market cap just in free cash flow every single year. Or check this out. Look, they made in free cash flow $11.46 billion. So that's an incredible amount of free cash flow. So what are they doing with all this free cash flow? Well, they just recently started paying a dividend. So they have a dividend yield of 0.63%, which isn't the highest, but they just started paying it, and there's going to be so much room to grow it. Also, a lot of people may not like Salesforce because of this high PE ratio. Check this out. It's a 44 PE ratio, but look at the EPS growth over the next 5 years based off the analyst forecast. It's expected to CAGR at 31%. So that kind of justifies the forward or the PE ratio. And we can kind of see that in the forward PE ratio that a lot of growth is priced in because it went from a 44 all the way down to 24. So there's a lot of growth priced in. That's why the price to earnings growth ratio is only a 1.37. Here we are at Microsoft. Where were we? At a 2.35 PEG ratio, super high forward PE ratio. When Salesforce is growing, I don't know, just as fast as Microsoft, but they're growing an extreme amount. And I want to do a multiple on this free cash flow. So look at this, their free cash flow per share. I like the per share metric because it includes the stock-based comp, and we have a lot of stock-based comp here, which I'll quickly show you, and then we'll do the multiple. So if we go to their financials, this is why it's important to look at this. So look, they have every single quarter stock-based compensation of $810 million. So $800 million of stock-based comp expense. But remember, this company cranked out an incredible, and I mean incredible, $11 billion of free cash flow just in the trailing 12 months. And that free cash flow, of course, is expected to grow and grow and grow. And remember, they made just this quarter, they made 1.45 billion in net income. So the net income also easily covers the stock-based comp expense. But anyway, let's look at this free cash flow per share of 11.83. So we'll do 11.83. And what's a fair multiple for this? Like, what's a 25 multiple on this? That's a $295 stock price. And here we are today at $252. So that means Salesforce is trading around 20 times free cash flow. Double check me on that. But I want to do a little bullish. So let's say they grow their free cash flow to $14, which I'm sure they will eventually, maybe in a year or two, but $14. And let's do another 25x multiple on that. That's a $350 stock price, which is over $100 above where we are today. So, it's not unreasonable to see in the future Salesforce probably be over $300. I mean, look at these margins. Gross margins of 76%, free cash flow of 31%. But now that we've looked at all the most important metrics, I want to show you the most recent earnings report and how much they're growing year over year, because it is really impressive. And on top of that, they're doing a ton of stock buybacks. So remember, they have a huge free cash flow yield. They're only paying out 0.63% of it in dividends. What are they doing with the rest of it? Look at the shares change quarter over quarter. You now own 1.22% more of the company than you did last quarter. So let's go and get into the most recent earnings. All right, so here we are on the Webull app. We actually own 2 shares of this in our Webull portfolio. I forgot about that, but look at this nasty candle. It went up to 270 and then boom, here we are going down. So what happened? Let's look at the most recent earnings report. So first off, the EPS is up 14%, which is the net income. So look, the net income was $1.43 billion and their stock-based comp was $800 million. But they make more free cash flow than net income. So if we go down here to the free cash flow, so since they are a subscription, they get a lot from subscription, they get a lot of annual revenue in their Q1. So look at this. Every single year, they have a huge, amazing Q1. So look at their Q1 last year. They made $4.49 billion in free cash flow. And this year, they made $6.25 billion just in one quarter. So anyway, Look how it's up year over year. So last year was 808, now it's 892. It is up 10%, but so if you average out the 4 quarters of free cash flow, you actually make more free cash flow than net income with this company. But also look at the net income. They used to lose a lot of money. That's why this was a sketchy investment back in the day. Now they're like, we're focused on investor returns. Let's crank out some net income. So, and that's what they're doing. And here's their free cash flow per share as well. As you can see, it's up 12%. So let's show you the stock buybacks that they're doing, because remember last quarter how they made 6 billion in free cash flow. They spent 4.13 billion of that just in the most recent quarter on stock buybacks. And if you look, they buy back stock every single quarter. If you average it out, well over $1 billion every single quarter they spend on stock buybacks. And look at this. This used to be a diluting company. They used to issue shares every single quarter just back in 2023. Now here we are, well, fiscal year. Here we are in fiscal year 2025 for them, and they just do amazing stock buybacks. That's so if we go to the total common shares outstanding, you now own 1.74% more of the company than you did 1 year ago. And look at it from last quarter. You went from 171 or 971 to 958. So huge drop from last quarter, well over $1 million. And check this out. So their cash went down from 1 quarter ago because they just spent 4 billion of their cash on stock buybacks. But despite this, they have 7 billion in cash, and they also have 5 billion in short-term investments, which is T-bills. So that's what they said on the earnings call. They're literally putting this money directly in the T-bills, buying the 1 to 3 week treasuries. And what is that doing for them? Making them a boatload of interest. So look at this. In the most recent quarters, they've been making so much interest when they used to pay interest. Like a year ago, they paid 19 million in interest. Now this year, they made 23 million. That's because they do have debt. Look at this. Their debt is down 10% year over year. I didn't know that. They paid off $1 billion of debt this quarter. I'll actually go look at that. But look, their total debt went down $1 billion. So it's only $8.43 billion of debt and $7.68 billion of cash. So not only is their cash down because of the stock buybacks, so they spent $4 billion of their cash on buybacks, they also spent $1.28 billion of that buying off their debt. So what an amazing quarter in my opinion. So that's why if we go and look at their retained earnings, they should have look at their retained earnings. They retained well over $1 billion from the previous quarter. So this is why I love Salesforce, man. Here's their diluted normalized EPS. So look at the year-over-year growth numbers. I mean, this is the number we actually want to look at because it includes exercise stock options and a lot of other things that the normal EPS doesn't include. And remember how they made 6 billion just in 1 quarter, and for the entire year they made 11 billion in free cash flow. Remember, their dividend only cost $384 million of that. And if we look from the last quarter, it's down. It used to cost $388 million. Now it's $384 million thanks to the stock buyback. So when they did that stock buyback, they actually saved them $4 million actually of quarterly dividends they'd have to pay to those stock. So man, this is why I love Salesforce, man. A very profitable SaaS business, software as a service. And then they have some incredible margins, and they even pay a dividend now. I did not buy them until they paid a dividend. That dividend makes this way more attractive because they have such a low payout ratio. And they have such a low payout ratio, especially when you look at their expected growth rate. They're expected to grow so much. So yeah, that's my thoughts on Salesforce stock. If you did like this video and like the insight, don't forget to drop a like on the video. It really does help me out a lot. And if you leave a comment, I will respond to every single comment down in the comments. And hey, if you're not subscribed, make sure to hit the subscribe button. My name is Nathan Robert. I'll catch you guys in the next video.